Hey everyone, and welcome to another exciting episode of Market on Mike. I'm your girl Natasha, and I have with me, of course, my co-host Daniel. Hello, Daniel.
Hello, Natasha. It's always great to be back for another episode of Market of Mike. Thank you once again.
Thank you very much, Daniel. So let's not forget, this is Market on Mike, and this is your guide through every market twist and turns. And today we're going to be diving into two popular trading styles to actually help you figure out which one might fit your life and personality.
Yeah, and like she said, it's actually going to be an exciting episode, something that you actually must listen to the very end. So, there are two popular trading styles we'll be looking out for to actually understand which one best fits your personality. So, whether you're just coming into trading and you're more suitable or you're more comfortable going in and out of your trades all on the same day without having to sleep over, dream of your trades, or if you're the kind of person that you're very much comfortable with slow and steady, you are fine holding your trades over a few days or probably weeks. So these are the things you're going to be looking out for this particular episode. We'll be covering the pros, the cons, and everything that actually comes with it.
Yeah.
No jargons in between.
Definitely, guys. So if you're wondering what are these we're actually talking about, we're talking about day trading and swing trading. So definitely for our first timers, you might be wondering what day trading is, what swing trading is, what's their differences, and how you can actually take advantage of both of them. And for our existing traders, I'm sure by now we already figured out which one works best for us. And if we're still not yet to do that, now this is an episode for you. So let's start with the basics. When you talk about day trading means you open and close positions within the same trading day. That is, you never carry a trade overnight. You open and close all positions within the same day. So right here, you have no overnight risk. Your book is flat by the market close.
Yeah, that's very correct. If you're the kind of person, or probably you're just coming into trading, and when you go into a trade and you go to bed, you end up dreaming about that trade. You know that, okay, this might not be for me, or swing trading might not be for me, because like Natasha rightly said, day trading just basically means going into the trade on a day, and before the day runs out, you're out of the trade, whether it's in profit or in loss. So you just want to end that day with no trades. So that's what day trading actually means. And on the other hand, we have swing trading, which is actually different. This kind of traders, they most prefer to hold their trades over a longer period of time so that they can catch a major move or for a longer period of time. So they hold trades for several days and possibly even weeks, as the case may be. They try to capture medium to high term moves in the market. So you're aiming to ride the bigger moves or the bigger swings in the market, and not just the tiny daily moves. So you want to catch the bigger ones.
Yes, guys. So definitely when you're thinking about day trading, you want to look at it like you're sprinting, right? Fast, intense, and you're done before dinner. And when you're looking at the swing trading, it is more like a jog, steady pace, a bit longer, and you can actually see the scenery change.
Yeah, and more or less 100 meters and marathon. So we can more or less link day trading to the 100 meters, which is quick, you're done in minutes, but the marathon, you have to give it time. You have to give it time for it to come into in. So it's actually quite interesting.
Yes, guys. So now that we actually have a very good understanding of what day trading is and what swing trading is, now we're going to talk about certain things that actually makes the decision. How does swing trading work, or how much time do I need? So we're going to be looking at it in different aspects, so that at the end of the day, depending on whatever personality that you have, you're able to work with what works best for you.
All right, then that's very true. And time is a very, very important section or thing to look at when you want to decide whether you're comfortable being a day trader or you're comfortable being a swing trader. You must understand the time you have, your priority. Do you do 9 to 5? Do you own a business? How available are you? Do you run schools or whatever? You need to put all of this into consideration before choosing. If you actually love watching your screen, probably you can sit down all day looking at your screen or looking at the market. Day trading might actually suit you better. All right, so you need to be online for the market open. You need to watch key levels in the charts, and you need to actually act quickly. You need to act very fast as soon as you see what you're looking for. So actually, day trading demands a whole lot of focus. So you need to be focused every single time. You need to be always aware of whatever the market is doing per time. So you actually spend a lot of hours watching your chart, how the market is responding to news or what news is coming out what time and how to respond to them, and executing your trades as quick as possible, especially around opening and closing bells, like
Yeah.
when the London market is about to open or the American or the stock market
You're
open,
ready
you know,
to
just ready
dive
every
in.
single time.
Yes, guys. So that is it for just like what Daniel said. When you decide to be a trader, you need to have the time for your trade. But when you're looking at swing trading now, it doesn't actually need so much screen time. Just like we said earlier, this is you taking advantage of, medium or even high term trade. So you could probably check it a few times a day, maybe morning to set up your trade, maybe midday to adjust, and at close to review. Swing trading actually fits those with busy days.
Yeah.
You might just check your setup in the morning, just like we said. So definitely maybe your 9 to 5 can be so stressful. It doesn't mean that you still cannot take advantage of the market. But so that you do not heap more stress on what you're already going on, you want to be able to stay in the market for much more longer time. So it
Yeah.
gives you time to reanalyze the market, gives you time to watch it, and all of that, guys. So remember, you want to consider what your time is. Your timing. Do I have the time to look at this trade? Because definitely if you hear or if you listen to some traders' losses, you see that most times it is always because, oh, I didn't have time to check my trade. So you have to be very realistic with yourself. Do I have the time to follow up? But you know that in everything you do, follow up is really necessary. And if you know that, okay, I don't have the time to probably follow up as much as possible, then you definitely want to look towards swing trading. You will still need to follow up on swing trading, however,
Yeah,
not
quite
as
less
much
time.
exactly as you have to do with your day trading.
Yeah, that's actually very interesting and very solid. This is actually great information you get in this podcast today. So day trading is like you're being glued to a movie. So if you watch movies, the ones that are very, very interesting, you just want to finish them up once and for all. While swing trading is more or less like you're watching a series. When you're watching a series at your own pace. So more or less like you're watching Black
Warn and come out next week.
Wait, it just made me remember watching Blacklist that I took 7 months or 8 months to watch. I mean, but it's quite long. But yeah, it's more or less like that. At your own pace,
At
no
your
need to
own
rush,
pace.
and the way it is. And you can also really day trade into a full-time workout. But swing trading is more or less like a gym session. All right, where you have to plan ahead, you don't have to stress too much, you have a whole list of plans and all of that. So it's actually very important to consider your time availability. If you're
Sure.
comfortable sitting in front of the screen all day long, you may want to do day trading. But if you don't have the time, maybe you work in oil companies or you have a 9 to 5 job, you may want to consider swing trading instead.
So after you have now decided based on your time, okay, because timing is very important, the next thing you want to look at is your personality fit. I think we talk about this all the time when we talk about risk. You know what you're willing to risk, you know how you handle your risk, right? I mean, someone losing $5,000 might not fling, right? And somebody losing $1,000 might actually be rushed to the hospital. So you want to be able to understand what your personality fit is like. So if you thrive on the adrenaline, that is, you love the quick wins and can handle fast losses, day trading gives you that rush. So if you live for the rush, you want that hormones running through, hitting that fast breakout. Day trading might light you up, and you need to be decisive and unshaken by quick losses. So as a day trader, I have actually seen some couple of losses in a day. For a day trader, as we know, that's not the end of it. We're always ready to go again, especially when we see an opportunity. So if you're somebody who cannot handle those quick losses, maybe you want to consider swing trading, because on daily trading, I mean, some days might even end bad. In fact, sometimes weak. I remember somewhere, I think 2 weeks ago, my trade up from the beginning of the week to the end of the week was in red. As a day trader, I don't want to say I'm used to it, but I think I understand, and we'll come back the next week doing the same thing, and of course, trying to grow that account. But if you're somebody who, you're not decisive and you're shaken by quick losses, then you want to look over to bring trading. Or what do you think, Daniel?
Yeah, that's very true. It's just more or less bringing my own personality into this. I'm a kind of person, a kind of tree that loves the longer term. I have a lot of friends that tell me, Daniel, why don't you scalp? Just scalp this, just scalp this. I'm like, nah, it's mentally not, it doesn't just fit me at all. I love to stay put in the market and allow the market form. So I could even stay in a trade for 3 days, for 4 days, up to a week, as the case may be. I just want that trade to realize. And if it doesn't, I just have to sit there and wait for the market to either tell me that, okay, I'm not going to move in a particular direction and I can probably exit in the loss, or basically I have to sit there and wait for the market to fully tell me that I'm moving my direction and probably hit my target and make a lot of money for myself. So if you prefer to be like me and you're a little bit calmer, you like a calmer approach, you can let the trade breathe, you don't mind sitting through the small ups and downs, because you could see a trade run in a profit of $1,000 and see it come back. There was an experience I recently had, right? I saw this trade, a particular trade I had, running to about $2,000 profit, and I left it because it hasn't fully realized, and it came all the way back down to a negative $200, $300. So that was like some crazy swings that you have to endure if you're doing swing trading. And if you can't stomach all of those, you want to consider probably day trading, right? Where you have to just take your profit. So if you don't mind sitting through the small ups and downs, swing trading might actually be for you. Swing trading suits those patience, and trust me, I am a patient type. Whether you can weather the small pullbacks, trust your analysis, now you have to be very, very patient and wait for the bigger move. Yeah, you need to wait for the bigger move.
Or people that want to eat their cake and have it.
Don't do that. Don't do that.
But true, guys. Even during swing trading, you might be able to some really, really nasty drawdowns. But definitely, don't forget, you have a much bigger and broader picture when you're trading on the longer term. So you would not want to be easily discouraged. It's just that we're trying out a strategy, and maybe first 10-20 minutes it's not going so well and you want to just eliminate. No, for swing traders, you have to be patient. And you're looking at a much more bigger picture. So day traders, I'd always say they actually need the nerve of steel, things that can flip in seconds. Swing traders need patience. They can flip in seconds. Swing traders need patience. Prices can wobble before the move in your favor. So ask yourself, do you thrive on high-speed decision making, or do you prefer stepping back and letting the market unfold?
Yeah, so you need to really consider that, whether you maybe in few seconds, once you've seen some profit, you just want to take it, go. That adrenaline is just there. You just want to take your profits and leave the market immediately. On the other hand, you're a little bit more patient. You like the market to form, to allow the market breathe, give the market to do all of its fluctuations and move in its actual direction. And you sitting in that moment just brings a lot of difference. But either way, once you're able to master which one works for you and you're making your money, that's the most important one. As long as you're making your money, that's it. Whether you're a swing trader or a day trader, it doesn't really matter. But you need to discover which one works for you best. Yeah. So now let's move a little bit further, right? So after you've considered the time, consider what kind of person I am, your personality, if you're that adrenaline person or you like it calm and smooth. After you looked at all of that, the next thing to look at is the capital and the risk. All right. So day trading actually requires more starting capital. And the reason for that is because you are taking a higher risk so that you can make some reasonable amount of profit on that same day with a smaller move. So for instance, you have $1,000 or you have, let's say, $10,000 that you're trading with. So you want to really take advantage of some important, maybe you're risking $500 to make $1,000 on that day, or you're risking $200 to make $400 or $500 for that day. So you just want to take some high risk so that you can make some reasonable amount of profit on that particular day. And it also requires a strict risk rule. So your risk has to be very, very strict. So whether you're risking 1%, you're risking 2%, you're risking 0.5% of your account, or you're risking 10% or 5%, but your rules need to be very, very strict, because you're not looking to take a larger move, but a smaller chunk of, a smaller part of the market, right? It can be actually reasonable. So you're making lots of small trades, and as a day trader, you can make scalpers. You can trade 20 times in a day. You can trade 30 times in a day. Some day traders can prefer to do maybe once or twice or 3 times in a day. All right. But you need good capital. And it's actually very important.
True, guys. So you can see that irrespective of whatever type of trader that you are, there's one thing you always want to consider, just like what Daniel said. It is your capital and your risk, right? So even as a swing trader, one thing I would always say is that questions you need to answer after you've determined your personality, you want to be able to determine what your risk appetite is. And based on the instruments that you're looking to capitalize on, right? You have your currencies, you have your commodities, you have your indices, your stocks, and whatnot. So first of all, you want to understand the risk associated with trading that particular instrument. That is the volatility of it. You want to be able to understand how fast can this go in profit and how fast can it go in losses. I feel that would actually help you to understand probably how much you need. And irrespective of the kind of trader that you are, your stop loss is really quite important, because even as a swing trader, the fact that you're capitalizing on a much larger time on the market means that you also want to have that stop loss, because there are times that market is not always going to go in your direction. So for every account that you're going to have, you'd want to make sure that you manage those risks appropriately. You give the trade more time so you can set wider stop losses and aim for bigger targets.
All right, yeah, that is very, very important. And whichever style you want to choose, just try as much as possible to make sure you're risking a reasonable amount, what you're comfortable with. Some traders are comfortable with risking between 1 to 2%. Some are comfortable between risking maybe 3 to 5. Some can risk as much as 10. But just make sure that you're risking what you're comfortable with. Don't risk more than what you should. And it's fine to risk lesser than what you should, but don't risk more. Because if the trade goes bad, you may end up hurting your account size, and it can end up hurting yourself. So that's very important too.
Yes, guys. So we've seen that when it comes to day trading, yes, you also want to understand your setup, right? Because these are two different setups. So definitely, as a day trader, you want to have that real-time news feed, because definitely if you're day trading, you want to pay attention to anything that can interfere in your trade. And I'm sure last week we spoke about places or links or websites that gives you access to real-time news. So you can always set up alerts, something to always let you know when something that can actually affect the market is going to happen, so you can know how to make your adjustments within the day. Don't forget, as a day trader, you should have the time to do all of this, right? So you cannot say, oh, I'm taking a trade right now, or I'm a day trader and I don't have the time to probably follow up on my fundamentals or breaking news. Because trust me, breaking news can make all the difference in your trade. So as a day trader, you want to be able to use fast platforms, get access to real-time news feed. And I think irrespective of whether you're a day or swing trader, you want to have your setup. That is, maybe use your laptop, your monitor, something that helps you see, exactly, helps you see the markets within a longer period of time, so you can know how to plan, how to set your stop loss, where to set your stop loss, and your TP. So with day traders, we're looking at loading up on one-click order entry and real-time news feed, and of course, time to follow up.
Yeah, very important, time to follow up. And the other hand for swing traders is kind of a little bit different, because they don't need so much trading tools, because they could actually trade once in a week or twice in a week, or even once in 2 weeks, depending on the swing setups that come once in a while. Swing traders, they don't need so much in terms of fast platforms or direct act or real-time new feeds. Although real-time feeds is very important, because it also helps you in making some apt trading decisions. But swing traders, they can actually get by simpler charting tools and end of day data and alerts. They literally can depend on alerts on their phone or email on some prices that they're actually looking out for. So they can just maybe set an alert on the phone or get an alert via emails, and good to go. So they don't have to always be on the chat or on the screen to monitor every single thing that comes away. Yeah.
Sure, guys. So let me make this quite really easy, because I've been able to speak to both day traders and also swing traders. So when I top, I think my day traders are, you're thinking cockpit, right? And when I say cockpit, so let's imagine busy instrument cockpit of a jet. I'm sure probably if you've been on a plane or a jet, you should be able to understand what cockpit is. But I'm saying lots of screen, switch, gauge, and constant monitoring. So you need quick reflexes. That is, you have to be on top of your game if you're a day trader. That is, your head has to be in it. So you cannot, that is why we talk about emotions. Your emotions is attached to it, but you need to have quick reflexes. You need to know when a trade is going wrong, how to do a recovery, because as a day trader, we're just trying to take opportunities of everything happening within the market in a particular day. And all your tools need to be at your fingertips. If you're probably using indicators, you want to be able to have it there. You have to be able to look at, for instance, if you're using your RSI, you have to watch, am I heading towards an overbought or an oversold? Just a day trader who watches real-time charts, news speeds, and executes rapid trade throughout the session. And then when you think about swing trade, you're talking about a comfortable command center tone. That is, now picture a relaxed home office or a living room setup. 1 or 2 screens, a cozy chair, your favorite mug nearby, and alerts popping up when action is needed. You check in a few times a day, set orders, and you can step away. Just like a swing trader who holds position for days or weeks and don't even monitor the screen every minute. So guys, which one are you comfortable with?
Yeah, so which one are you comfortable with? When you mentioned the cockpit, you just imagine you are in a plane and during takeoff, you see the pilot step out of cockpit. Imagine that. A lot of panic, right? So everyone just begins to panic, or during landing, you just see the pilot
step out of the
cockpit.
When the plane is already taking off and you see both pilots step out, you two want to step.
You want to exactly. Everyone started looking at themselves at what's happening. Yeah, so that's more or less how focused you need to be as day traders. You need to always constant monitoring, need quick reflexes.
Yes,
but swing trading much more comfortable when it's time for you to execute. You get your laptop,
gives you time,
are able to just do that. So you have to choose which one you are comfortable with.
Sure.
So let's now go into one of the last section, which is how to choose if you are comfortable being a day trader or you're comfortable being a swing trader.
So more so questions you need to answer personally for you to determine which works best for you.
Exactly.
Yeah.
So one of them is, do you have a job where you're doing 9 to 5, and how tight is that job? So if you're kind of person that do 9 to 5 or you're doing 8 to 4, you have a full-time job, you want to consider swing trading. If swing trading will fit you better.
Good. Or your days are flexible. That is that probably you have to, mostly you have to work from home, or you have all the time, or you have your own business and you don't always have to check in every 5 or 10 minutes, then you can actually consider day trading. Gives you time. Most importantly, you need to have that time to be able to follow up on your trade. So like I said, you have flexible days. And crazy thing is, when we talk about flexible day, you don't have to trade every day, right? Maybe even in your week, you have about 2 or 3 days that are really free. You can consider using those 2 to 3 days to actually try day trading.
Day trading, yeah, true. All right, so you actually need to understand the kind of person you are, more or less what people call your temperament. Exactly. So if you are a kind of person that you love fast action, you like, that rush. Yeah, so if you're a kind of person where you see profit, you're like, hey, profit, no, you desire those kind of things. You just want to, you may want to consider day trading, where you can trade about 10, 15, 20 times on a single day and nobody can take your profit. Or if you prefer a slower pace, you like rushing, you are a calm person, you like it slow and steady, you may want to go for swing trading instead.
Yes, guys. And of course, you want to assess your account size. That is, see how comfortable you would be on both if you're doing day trading or swing trading. Of course, the stop loss, right? Risk. You can't do trading without risk management, right?
Yeah.
So if you see that, okay, fine, you have your account and you have a tight stop loss, you can consider your swing trading. However, if you're looking for active management, you want to be able to take opportunities on different instruments then of course you can be a day trader.
You can be a day trader. To actually end the part, you can actually try out a demo account, or yeah, you can actually try out the demo account for a week or 2 weeks. Try to see which one works best for you. Open a demo account, try both styles for a week each, and see which one feels more comfortable and you feel right. So you may want to go for the one that's aligns with all of these questions that we've mentioned.
Yes, guys. Just like already said, these are things you want to consider when you're looking to start trading. So, would you want to be a day trader? And remember, before you answer these questions, these are things you need to ask yourself. Because one thing about trading, you have to be realistic. If you know you don't have the time to go in fast, you don't have the time to leave fast, you know that, oh, I would not have time to actually focus on this particular thing right now, then consider your swing trading. However, if you feel, oh, okay, I don't have the time to do this, I think I would rather go on a long term, please don't try to rush into day trading, because you'll find yourself having to close on probably multiple losses, which of course it's not good for your psychology, not good for your emotion. So that's our rundown on swing versus day trading. Both is profitable. Both is very profitable. At the end of the day, it is the best style that fits you, that you want to be able to apply.
Yes. All right. So, guys, that's actually all for this particular episode. I hope you enjoyed the episode and you able to pick one or two things and you promise to apply them. All right. You need to apply them, because once you're able to discover what kind of trader or what kind of trading style fits you best, you begin to notice that you take more trading or more accurate trading decisions, and your results in trading look much better. All right. So if you enjoyed this particular episode, don't forget to
or you
subscribe.
learned something from it,
Yes.
or this particular episode made you take a step back,
Right.
to probably review your choices, please don't forget to hit the subscribe button.
Yeah. So share with a friend.
Leave us a review.
Yeah. Also like the video. Don't forget to
Yeah.
like this particular episode.
And of course, and we would also love to hear what style you're actually leaning towards.
It's very important. So thanks for listening, guys.
Until next
Till
time,
next time.
stay curious
Yeah, trade smart, guys.
and see
See you in the market. Bye.